Hi there, welcome to Kneppy Invest. I thought I'd do a bit of an update video to Credit Clear. It wasn't that long ago I did a video on this company, and I said if Credit Clear was very close to hitting a inflection point. And in fact, those words, inflection point, will be mentioned a few times, particularly in the next few slides. So I think Credit Clear right now is looking interesting in terms of the financial performance of the company, and also the chart is also looking quite interesting. So you bring those two things together, and definitely Credit Clear is a company you might want to include on your watch list. So last time I did a video on this company, it was around their first quarter results in financial year 24. And I just mentioned this company was on the cusp of an inflection point. So what is an inflection point? So one of the things I look for, and one of the reasons I look at Appendix 4Cs and 5Bs, is I'm looking for those companies that are about to hit that inflection point. And that inflection point is becoming operating cash flow and free cash flow positive on a continuing basis. In fact, if a company achieves 4 quarters of positive operating cash flow, there is potential that company will be told by the ASX they are no longer needed or required to produce an Appendix 4C or 5B. And I think Credit Clear is on the cusp of just doing that. So about 3 months ago, when I recorded this video on Credit Clear, I used the word inflection point, or the company was on the cusp of inflection point. And lo and behold, when the company released their half-year results, they used the terms inflection point in their presentation. First half 2024, a pivotal inflection point for Credit Clear. Now, this was my most favored slide in their presentation by far, because these are sort of things I am looking for. So on the left-hand side, they're talking about the inflection point that I mentioned in the previous slide. On the right-hand side, we have a profit upgrade. In fact, it was a revenue and EBITDA upgrade. And that is something else I'm always looking out for, not only in half-year, full-year results, AGMs, but standalone announcements as well. Now, the reason why I'm looking for an inflection point is stated really well by the company in the second point on the left-hand side. So they just mentioned that they were positive cash flows, or they had positive cash flows from operations of $1.6 million for the half year. But in the second point, they stated the company is now growing sustainably, which is probably the most important thing here, profitably and generating free cash flow. So why is growing sustainably really important? Now, one of the reasons a lot of companies list on the equity market or on the ASX is better access to capital through capital raisings or equity raisings. And the reason they do that or want that is because they are burning cash in their operations or their business. So cash is going down. But the goal for all those companies is to get to the point where they don't have to go back to the market to raise any more monies. They can use the cash generated in the company or their business to grow for the future. And that's what they mean by saying the company is now growing sustainably. They're using their cash flow from operations to grow the company. Now let's have a look at the profit upgrade and revenue upgrade for this company. So financial year 24 revenue guidance up from between 39 and 41 million to 40 to 42 million. So you might laugh at that, saying it's a small increase, but it's an upgrade. And the market doesn't care. Usually the market doesn't care. If it's a small upgrade, it's still an upgrade. And the market usually loves those sort of things. And underlying EBITDA, they're expecting that to now be in excess of $3 million, which is significantly higher than the previous guidance for underlying EBITDA, which was expected to be between 1 and 2 million. So this company is moving in the right direction when it comes to how the company is running their business. They are now free cash flow positive, profitable, and they're also providing the market with profit upgrades. Now, before we move on, I probably should have mentioned what this company actually does. And this is a slide in one of the presentations that they released maybe a few years ago. And it's really interesting that they had to state in the notes section, we do not buy debt. We work with our clients to resolve their customers' overdue accounts. So for anyone who has owned a business in the past, you know that you owe people money. And also there are people who owe you money as well. And sometimes they can take a little bit of time to pay you back. And that's actually quite important for businesses, particularly small businesses who rely on that cash flow coming in from their accounts receivable. And that's where Credit Clear steps in. So they have this little process, sort of like I don't know what you call this little diagram here, which shows you exactly their business model. So client appoints Credit Clear. Credit Clear and client establish a two-way data exchange. Client sends data file of overdue accounts to Credit Clear. Credit Clear engages clients' customers to resolve accounts payable. Credit Clear receives a commission and/or fee for account. So again, they do not buy debt. They work to clear these sort of situations where there might be an overdue account that needs to be settled. Now let's have a look to see how the company performed in the December quarter. And we sort of know all this. Operating cash flow positive 1.3 million for the quarter, 1.6 million for the half year. Now, the other thing I should mention here, and this is quite important, sometimes you'll see the Appendix 4C operating cash flow or the receipts a little bit different from the cash flow in the half year or full year. And the reason behind that, and I'm 100%, not 100% sure on this, but the reason behind that is the Appendix 4C is not audited, while the half year and full year accounts are audited. And sometimes you will see slightly different numbers between the two. Sometimes the differences are quite big. But the main thing here is company is operating cash flow positive for the half year, for the 6 months. And because the company doesn't spend much money in financing investing activities, $339,000 in IP, which is capitalized research and development, and only $37,000 in capital expenditure. So this is not a capital intensive company. The company was able to grow the cash on hand by almost $1 million, up from $12.2 million to $13 million. So again, as a company stated, they are able to grow sustainably. They're not needed to go back to the equity market to raise capital because cash is growing, and that growth is because of their business or their success in their business, and they are operating cash flow and free cash flow positive. Now let's have a look at the receipts history for Credit Clear. This goes back to when the company listed on the ASX, and what we see here is receipts growing through time, and that's exactly what you want to see for any company. Now there have been periods of time when it looks like receipts growth was stalling, and that was true for financial year 23. In fact, all 4 quarters receipts were fairly similar to the other ones. In fact, the last quarter of that particular financial year was the worst quarter with $8.3 million receipts. So there could have been some thought that maybe the receipts and the growth in this company was coming to an end, but they're just showing in the last 2 quarters that maybe that was just a little blip on the business performance of the company because receipts have gone back to a growth trajectory up to $11.8 million in the last quarter. Now let's have a look at a chart for Credit Clear. This starts at towards the end of 2022. Share price at that point in time was around 44 cents. And the share price had moved into a downtrend, fairly well-defined downtrend that lasted until about the middle of 2023, when the company did see some support at a share price around about 17 to 18 cents. But if you compare the volume, or just look at the volume, when the share price moved into that downtrend, you see very light volume. The reason that is important, when you see the share price in a downtrend and really light volume, that is telling us the market is just not interested in the company. And the interest comes from some value investors seeing some value in the company as the share price gets to a certain point. For Credit Clear, it seems like that point or that price was in the low 20s. We started to see increasing volume in May and June, and that signals the share price is nearing a bottom. And I do see or find that there is a correlation between an increase in volume and the share price of a company when it's in a downtrend, finding some support, not necessarily a bottom, but definitely some support. So the share price moved. We saw that volume increasing around low 20s, and the volume and the share price continued to fall to around 18 cents. And then the share price went sideways. We still saw some pretty good volume, but not quite as good as we saw in May and June. Now, the share price did reach a bottom around about 17 cents in October and November of last year, but the share price continued to go sideways. You also notice a volume. We saw some really good volume coming in towards the end of 2023. So there were participants in the market who, like this company, Whether they were value investors, I don't know, but someone liked this company towards the end of 2023 into the start of 2024. That interest continued as the share price went sideways. And then we saw a pop up in the share price in the middle of February. That was the February the 16th, the best day there. That was not a breakout. It got very close to a breakout, but it was not on the back of any financial news. They did not release anything on the February the 16th, if I remember correctly. And then it took another 5 days for the share price to break out. And the breakout coincided with the company releasing the half-year results on February 26th. The share price on that day increased from about 22 cents to 27 cents. Now, that also meant that the old resistance level at 24 cents that was set up back in June of last year was broken. Now, 24 cents was tested twice in consecutive days, about 5 days after the breakout, and the test succeeded. The share price did not fall below 24 cents, but we haven't seen the share price go on a run here. Now, volume has continued to be nice, but I'd like to see some bigger volume coming in, which tells me maybe some institutions are getting excited about this company. Maybe institutions see that the company has hit that inflection point. They're profitable, they are growing, and that is the way we will see the share price go on a run. Possibly, the institutions are waiting for this company's Appendix 4C for the March quarter if they release one. Maybe they won't have to release one because possibly they have been operating cash flow positive 4 quarters in a row. So definitely sentiment in this company has shifted. It's more positive now, not overly positive. If it was overly positive or just quite goodly positive, I think the share price would be in a definite uptrend and above a share price of 29 cents. But things are looking pretty good for Credit Clear, not only in the business, but also the chart. And that is all I have for this update on Credit Clear. Company looks like it is turning things around, particularly when it comes to the chart. Maybe not the business. I don't think they're really needed to turn around anything. They've just hit that inflection point of becoming profitable and cash flow positive on an ongoing basis, which means they can grow sustainably. And the market is starting to see some good things with this company as well. And that's why the chart is starting to look much better. And potentially the share price is moving into an uptrend. It's broken above 24 cents, which was an important level for this company. So things are moving in the right direction when it comes to Credit Clear in the business and also the chart. If you have any thoughts about Credit Clear, love to hear your thinking, particularly if you're a shareholder. Leave your thoughts about this company in the comment section of the video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.